Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, January 31st at about 2:45 p.m. Eastern. Now, before we start, please know that I will be speaking at the Money Show Orlando on this coming Saturday, February 8th, on how to power up your swing trading profits. My presentation will also be streamed live, so you can sign up to watch for free. For more information, go to moneyshow.com and click on the Money Show Orlando. And now, on to the market. The S&P 500 and the Dow Jones Industrial Average slid pretty hard today, hit by worries over the impact of the coronavirus epidemic on global growth, while strong earnings from Amazon checked losses on the NASDAQ. Shares of the online retailer surged 9.2%, after the company beat Wall Street's earnings estimates, putting it back in the $1 trillion market capitalization club. Wall Street indexes are on course to end the week on a poor note as coronavirus fears continue to grip the financial markets, although corporate earnings have been largely positive so far. So we've got kind of coming and going here. On that note, let's go on and look at three charts that could give us some insight into the week to come. Now, first of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the ETF that closely follows our S&P 500 benchmark index. Now, the SPY popped higher and lower this week. As you can see, if you look on the hard right edge of the chart, it was up, and then way up, and then down again today. But it did stay in a range here between 329 and about 333, depending on the news about the coronavirus on which day, and of course, earnings reports. Now, after touching a new all-time closing high on January 17th, right here, at $331.95, then it kind of consolidated over a few days and then made this fall down, mostly on the coronavirus news. Now today, when I captured this chart, the SPY was trading at $322.47, or about $32.24 on the S&P 500 itself. It's beneath the 20-day, the red line now. It's beneath that 20-day moving average. It is still above the 50-day moving average so far. Now, technically, it's fallen out of that channel that it was in that we've been watching, that you see with the blue lines here, the blue uptrend line and the blue channel line. Technically, we're still in an uptrend here, certainly in a short-term uptrend, and hopefully stay there. So until we come down and make a lower low, and we don't really have any lows until way back in September, any lows to fall through, maybe a little one here in November. But it's going to be pretty tough here to fall hard enough to actually break this uptrend unless it's in the short term. I'm looking down here at the RSI. We talked quite a bit in the middle of January about how the SPY would look to me like in a period of FOMO, F-O-M-O, or people buying in the fear of missing out. A lot of people who missed, or a lot of investors, traders who missed this whole run up are like, boy, I better get in now. And of course, that doesn't always work. The market was stretched really tight, and we knew it, and we talked about it several times. The RSI became overbought when you see it over the 70 line here, stayed overbought for quite a long time. Now, however, that line is back down at neutral at 44. And when it's over 70, it's overbought. When it's below 30, it's oversold. Right now, we're in totally neutral territory on the RSI. Now, the MACD line, of course, here, the red line has fallen. The signal line, I should say, has fallen below the MACD line, and that is to be that's the confirmation that the RSI is falling, and that's certainly to be expected. Now we do have resistance here at 329 right here, and more resistance, of course, up at the highs at 333. We have nearby support at 322. obviously, and just below it, the 50-day moving average is coming in at $320.71. Now, we've got to consider that we do have 2 more weeks of earnings season that will help form the market's moves, and of course, sadly, we have continuous news on this coronavirus, which I'm sure we all hope for a lot of reasons, that, and especially the people being affected by it, that they will find some cure or some way to contain it. The good news here, if there is any, is that a mild pullback here will give us some great new buying opportunities. So please keep your stops in place, and do remember that cash is also a position. Our next chart today is going to be the QQQ. Of course, as you know, this represents the NASDAQ 100, the top non-financial stocks in the NASDAQ stock market. These also, of course, this is headed up by the Apples, the Amazons, the Facebooks of the world, and we can see today that the Q gapped open right here. You see how the QQQ gapped up and open to $223.50 and then fell. When I captured this chart today, the QQQ was trading at $219.68. It started up this morning on Amazon's earnings because they were sterling, and Amazon, of course, gapped up pretty high this morning. So that was a lot of this pull up here. After that, though, the QQQs, they're looking a little soggy here. There's trading right now on the 20-day moving average. 50-day moving average is down here at the moment at $212.36. We noticed that last week it came up and out of its channel line looking very bullish, but again, if you look down, and we talked about it at the RSI, it was stretched too tight, it was overbought, and I just wondered what event would cause the QQQ to fall, and it was the coronavirus. There's always something, there's always a reason, and this time we got the coronavirus. So again, this time it's gotten soggy, gapping way down on Monday, and then trying to pull back up on some pretty good earnings reports from different companies. We now have resistance at 224, and then again at 226, with nearby support at 217. We've got this channel line or uptrend line coming in, and then of course more price support all the way down, certainly near the 50-day moving average again, which is now coming in at $212.36. So the RSI, of course, has fallen back down under the overbought line. This is just, so far, this is just a little blip on the screen. That's all it is. We're going to have to see in the coming week as earnings continue to be announced and as the coronavirus news continues to come out. This ride, so far we're in an uptrend so far. It looks good, but now it could start to get really bumpy. So please, please, please keep your stops in place. Our final chart today is a chart I don't believe we've looked at, excuse me, in quite a while. The VanEck Junior Gold Miners ETF, symbol GDXJ. It has 72 holdings in it. This is the smaller gold and silver companies. Top components are Sibanye Gold, Pan Am Silver, Kinross Gold, North Gold Fields, Yamana Gold, and taking a look here at gold miners again. In Tony's Market Club, we are still in the GDX. But now we're looking, and that's the VanEck Gold Miners ETF. Now we're looking at its sibling, the VanEck Junior Gold Miners ETF. Sometimes it can move just a little differently and have a little bit more energy than the GDX. Now we can look over here to the left. We can see how the VanEck Junior Gold Miners, the GDXJ, came off of its lows in May, and May is a good month for gold miners, gold to start up. That's a seasonal trend that usually happens. So the GDXJ came up and moved off its lows at about 28 up into the 43, 44 area. Then it kind of wandered around and came back down, sunk back down as the market went up dramatically. Then returned to the highs that it was at back here in December, and at the very, very end of December and first part of January in this year. So, and that was about 43.50. Since then, it's pulled back under the 20-day moving average, but maybe starting up a little bit today. So if in the coming week the market stays weak, not strong, but if it stays weak, it closed today at $41.53. If the GDXJ starts up in the next week, and if the market is weak, I may add shares of it to my trading portfolio. My initial stop is going to be a close below the 50-day moving average, which is now coming in again at $39.88. I know it's a tight stop, but I want to keep it there on purpose. So it's trading today at 41.53, right above its 20-day moving average. If it starts up in the coming weeks, say to around 42 or so, and the market is weak, I will add shares to my portfolio. If it moves up and over resistance right up here at 43.50, I will definitely add shares to that position. And of course, the whole time I'll be trailing a stop. So if the GDXJ breaks above this 41.53 where you see it right now and the market is weak, you may want to keep an eye on it in the coming week. And now for the upcoming week's economic reports. But first, please join us this coming Monday for our next session of Tony's Market Club. If you're not sure how you can make money in the market right now, let us help. During our session, we talk about which side of the market to trade, have a mini trading lesson, and I give you stocks and ETFs that may become ripe for high potential trades. Can't attend our live session? No problem. The recording is available to all of our members just a few minutes after the session ends. This is a low-priced, high-value opportunity to learn how to trade more successfully and how to make more money. So please join us. For more information, go to the link on this screen or simply click on the button below. And now for the upcoming week's economic reports. And please remember, we have hundreds of earnings reports coming out every single day for at least the next 2 weeks. So along with those, we do have these economic reports on Monday. Auto and truck sales are important. And we have the monthly ISM, Institute of Supply Management Manufacturing Index, and that's also looked at strongly. Not much on Tuesday. On Wednesday, we have crude inventories, as we always do, about 10:30 in the morning. That'll be interesting. And the ADP employment change. On Thursday, we have our usual jobless claims, natural gas inventories. And on Friday, we'll have the monthly jobs numbers with the unemployment report. That will also be looked at. That's an important number. So again, join us for Tony's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Now.